late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, arena so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today we're going to jump back into the educational side of things. I want to take a look at the charts and show you kind of what I'm looking for in terms of support and resistance. So when we're talking about buying into the markets, essentially to break it down in very basic terms, we want to buy low and sell high. I know it sounds easy, it sounds straightforward. That being said, buying blindly into the market isn't the best way to actually do this. As I've talked about, you can end up buying into a downtrend, and then that's going to really hurt. It's going to affect your emotions as an investor. It's going to also lower the amount that you can kind of purchase for the same price. So we just want to recognize the general market trends and then look at how we're going to enter the market. So talking about support and resistance, I'm just going to flip to the chart here. We'll take a little quick look. So essentially this is going to look pretty confusing to most of you likely. Lots of lines, lots of different things going on in this chart right now. But essentially this is kind of what I want to look at in terms of all the different types of the different types of support and resistance that I do look at here. So we're going to break each down individually here, and I'm going to give you a bunch of examples, but just as a broad kind of look here, I'm just showing you these are all the different types of support and resistance that I look for in a chart. So starting here, we've got our horizontal support here, horizontal support resistance. So horizontals is one thing we can look at. That's essentially when you see price action interacting with the same levels repeatedly over an extended period of time. So we saw right in this zone through here, basically Bitcoin acting as resistance the prior cycle. Same thing right through here, also acting as resistance went on this kind of attempted breakout move. Now it is a support zone. We've broken well above it, so we need to watch this zone for support. Price might come down here and hopefully get a bit of a bounce because there's such strong price action kind of in this area here with the previous cycle highs. And I do expect at least a little bit of a better reaction, get maybe a little more of a bounce out of these zones, see if we can kind of reverse our trend and continue to the upside. Otherwise, so it's just to give you an example, we've got it marked a few different zones here on the high time frame, so you can see essentially basically dating all the way back to the prior cycle high right through here. So that's a previous resistance zone. Now it is support. You can see basically resistance during the prior cycle high, resistance during the bear market rally here in that kind of accumulation phase, and also support when we did break out. So acting as support for the prior cycle bear market low. The subsequent cycle bear market low acting as that level there. So we've got horizontal support, we've got upsloping trend lines, so those are diagonals. It's important to note that horizontal support and resistance is stronger than trend lines or diagonal support and resistance. Trend lines can be lost, horizontal support is stronger. So it's just in terms of how we weight these. Obviously you want to consider your horizontal supports as being stronger than those diagonals. That being said, if we can get some confluence between both the diagonals and the horizontals, that's going to further increase that amount of support. So that's going to be a better setup than if you just have diagonals or if you just have horizontals. So looking to kind of utilize those together. We can see these trend lines both act as resistance and they can also act as support. Basically in the bear market here we see price stuck under this trend line, and then once we were able to break out, the trend is broken and we're able to continue to the upside. Kind of similar to what we saw from this peak here down to our bear market low. We saw this downtrend, price just stuck underneath it. As soon as we were able to break above it, confirm that uptrend structure, and then we're off on our way on that next leg up, or kind of the reversal move. Similar thing that we're seeing right here. So just that downtrending price action. We need to see it break out. That being said, just continued downtrend, not really interesting in my opinion. That's why I'm coming back to the educational side of things. Nothing really looks bottomed in the market right now in my opinion. We don't have the confirmation that I talk about. So it's a good time to step back, touch up on our skills, and figure out how we're going to position ourselves going forward here. So apart from that, we've got our upsloping diagonals, we've got our horizontals. Now we also have Fibonacci support and resistance. So I'm going to get rid of a little bit here just to clean the chart up for you a little bit, so we can see our Fibonacci zones a little bit better. So essentially what we are seeing here is our Fibonacci support zones. So basically what we do is take a Fibonacci retracement, so that's this tool right through here, and we're going to pull it from the low of the prior cycle to the high, and then that brings up these levels right through here. So essentially you can see from the swing low to the high of that cycle here in 2017, 2018, we essentially came back to just below that 786 level here. So 786,618, that's a Fibonacci golden zone. The reason I target kind of these Fibonacci levels a lot of the times, or look for them in the charts, is because Fibonacci numbers are tied to nature and humans as beings of nature, and being the kind of the broad makeup of the market. So essentially what you see in a chart, all these candlesticks is just people trading that asset, so buying and selling it at certain prices. And the more price action that we have at these levels, the more likely we are to get a bounce, because if price returns to those levels, you start to get people adding to their positions because it's close to their cost basis. You know, they don't want it to drop below what they paid for, so they're really looking to add there. So lots of the times I seem to find this 618 to 786 Fibonacci level does really play out a lot of the time in terms of a highly volatile asset class like Bitcoin and crypto. In terms of the SPY, you also might be just looking at the 0.5 Fibonacci to the 618, so looking at that as a potential for a less volatile asset class to watch. But you can essentially see basically from that low to the high, retracing just below that 786 Fibonacci, getting that first kind of counter trend rally, coming back, retesting those lows, holding that 786, and then continuing on from there. And then if we take a look at the next cycle here, so again, from the cycle low to the cycle high, look at that, we came down, tagged the 786, had a little bit of relief here, but ultimately coming under, just sweeping below the 786, similar to what we did over here, and then we were able to break above, continue that counter trend rally, and then we were off to the races from there. So if we look at the current cycle, taking that same Fibonacci level from the low to the high, that gives us a 786 target of just under 36,000. That's kind of my looking at a potential bear market low for the cycle somewhere in that region if history is to rhyme again. So that's the Fibonacci levels that I'm talking about. We can get rid of those. We also have moving averages are another type of support and resistance that we can consider and we should actually pay attention to. So we have a bunch of different moving averages. I'll get into that later, but I'm going to clean it up a little bit here. Just showing you the ones that I pay attention to the most closely in terms of a high time frame trend is that 50-day and 200-day moving average. So the 50-day is this orange line and the 200-day is this blue line. To be in a macro uptrend, ideally you want that 50-day above the 200-day and price above that 50-day. So what we saw right through here, that's that macro uptrend. Same thing through here, and even through here we did have that little uptrend signal right there. Downtrend alternatively is the kind of the reverse, 50-day under the 200-day. Price loses those moving averages, rejects on that retest, and then stuck under that 50-day moving average for the rest of that downtrend until we start to bottom out. So moving averages, another one we can pay attention to. So just looking at all these different various kind of forms of support and resistance, the more of these that we can stack at key levels of interest, the more likely we are to get a reaction or a bounce from those levels. So that's why I pay attention to it. So we're going to look at Ethereum here really quickly. I've just pulled a bunch of different horizontal support levels. So this is going to be the horizontal support examples here. Basically, we see up here, you know, this is all resistance as price is above it. This was actually a support before. It's now resistance because we've lost that level. But you can essentially see where it acted as support through here last cycle, acted as resistance, acted as support, acted as support, acted as support, and then we lost it. So now this is resistance resistance, we need to be careful because if price comes up, retests this, we need to be sure that we're either going to get a breakout move and maybe we can hold this now as support again and continue up. Otherwise, we get that continued downtrend price action. So that's why we pay attention to support and resistance, as because when price comes into it, how the price reacts off those levels is going to give us signals of likely the potential for the upcoming price action. So if we see it come up, reject here, that kind of just signals to me that we're likely to continue that downtrend move, and then maybe we have to come to these lower targets here. So the next support level underneath it, you can kind of see acted as resistance right through here. It also acted as resistance on the prior, or the 2017-2018 cycle high right here, and then it acted as support right through here and here during the current cycle. So paying attention to that, that's the next support level I see. And then just below that, we've also got this horizontal support here. So you can even see if I drag it all the way back to the prior cycle, acting as a bit of resistance in there, support through here, support through here. So that's another zone of interest. If we come to this level on Ethereum, I think it's going to be a really good buying opportunity. Haven't seen those levels since that 2022 bear market. So let's potentially watch that going forward. And then last, we've got another support zone marked just underneath here. So you can see acting as resistance, acting as support, a little bit of resistance through here, resistance, resistance, acting as support, and then we broke off and went on that parabolic move. So that's kind of the horizontal support and resistance that we watch. It is kind of the strongest levels. Another thing that we can look at in terms of horizontal support is our volume visible range profile here. So the VRVP, if you hear me talk about it in the past, it is something I do frequently watch and will continue watching going forward. So you essentially have all these different bars here showing you the different volumes where this asset has been traded, and where the most support is where these bars are going to be biggest. So this right here is called the point of control. If you hear me, it's called the VRVP POC, or the VRVP point of control is how I'm going to refer to it in the future. But you can essentially see just those big bars right through here. So we kind of see we have a little bit of support in terms of the VRVP right through here, but the major support is coming down at these lower targets. That being said, this is a weekly chart, so if you flip to the daily, that VRVP is going to change slightly. So I'll even show you right now. We'll just flip to this daily chart here. So you can kind of see, depending on the time frame, that point of control is really going to change. So basically the high time frame is the most important. That's going to be the strongest level of support. And then as you get into the lower time frames, support and resistance just gets a little bit weaker. That's because there's less price action, so it's just something to pay attention to. It's why I wait for confirmation on the daily or weekly charts. But you can see, quite a bit of resistance here in this VRVP right there and right through here. So we actually need price to get back above these VRVP point of control on the daily chart. Looking at the weekly chart, we're sitting well above it. I don't really think Ethereum is going to come back to those lower targets. If we see like a sub $500 Ethereum, it's going to be a pretty crazy opportunity in my opinion. Or it's going to mean kind of Ethereum is just going to continue bleeding, and it's going to be not looking good for kind of broad markets to be retracing to those levels. So it's just something to pay attention to, marking our support and resistance, and then as we flip these levels, watching how price reacts off those levels. So when we saw this come back here, bounce here in that uptrend structure, that's a good signal to enter a position and ride that trend up. Same thing when we start to see things breaking down and rejecting. So like right through here, when we saw this come down, come up here and reject, that's a signal on that lower high rejection that we're likely to continue that downtrend, and you maybe look at de-risking or kind of getting out of the positions if you're not comfortable in them. Looking at Fibonacci levels here, so I talked about those. Basically why I like the Fibonacci levels is I just find that more often than not they do play out. Even this rally right through here, we had that 618 Fibonacci retracement. So the golden zone, 618 to 786, that's where I'm going to find levels of support and resistance. First, I'm going to show you how to find the support. So basically we take the point from the swing low here to the swing high, and then as soon as price comes to at least within that 618-786 zone, I've then considered that rally to have played out. So the next Fibonacci that I'm going to pull is from the next swing low to that swing high, and then again waiting for that 786-618 retracement. So I kind of see basically this one, I pull the fib, you get that entry. This is now played out. So if we talk about this one has played out. We go on to our next rally, it tops out, so this low hasn't formed yet. We pull from the swing low to the swing high, and then it comes down to our 786. This rally has now played out. That's our entry right in through here, and then we see same thing, another rally coming back, 786-618 retracement. This one is played out, same thing through here, played out, and then played out, and then also this one has currently played out. The issue now though that we see is we haven't really gotten that same reaction from that 786 level that we did in the prior rallies. So we've kind of broke down here, and now we're going to look to be in that downtrend price action. So the Fibonacci levels, they do work a lot of the time if the trend is continuing. That being said, they're not absolute. We see here there are times where it will break below that level if it is in a sustained downtrend. So then we're looking at our other support levels in that instance. That's why I say when we look for confluence, we're looking for different levels. We see pretty much, we can also, if we just clear this all up, you can take a look at the Fibonacci's from a very high time frame. So if we take a look at it on a cycle perspective, looking at it from the low of the cycle to the current high, just giving us an idea of what might be a decent opportunity. If we look here, you know, anywhere in this 618 to 786, if you believe the cycle is going to continue playing out, you don't think that the cycle top is in, and you think we're going to go on that traditional right translated cycle for the remainder of the next couple years, then this is going to offer a decent buying opportunity or a decent accumulation opportunity, just entering that golden zone on the very high time frame. So from this low to the max high on the weekly chart. Flipping over, we can also, actually, sorry, I got to show you how to find resistance here. So we'll just do that quickly. Essentially, you can do the same thing with this tool, Fibonacci retracement. If you want to find a resistance level, pulling it from the high to the low here, and then looking at those same levels, that 0.5 up to the 0.786 is going to offer that resistance. So if you're looking for a bounce play on something, you know, it comes down, you maybe make your buys or whatever, and you're looking for a bounce play to kind of de-risk, looking at these Fibonacci retracement resistance levels can offer decent opportunities to kind of get out of positions if you think that trend is going to just keep continuing to the downside. We'll flip over here looking at trend-based Fibonacci extensions. So this is another Fibonacci-based tool. How we use it, essentially, we take 3 different points. So we have a swing low to a high to the next low, and then that's going to pull up all these levels right through here. And then our target profit taking level is the 1.618 Fibonacci and the 2.618 Fibonacci. So anywhere in this zone is going to be a decent opportunity to take profits. The way this kind of works is rather than showing us those resistance levels below the prior high, so if you think the trend is continuing up, then you would look at a tool like this that's going to give you this extension above the previous high based on those Fibonacci numbers. And you can see basically through here on this trend, we landed right in that 1.618, 2.618 level, you know, so decent profit taking there. And then we took our next swing, our trend-based fib from the next rallies here. So from this low to this high to the next low here, which we saw didn't quite play out in this rally, but ultimately came here, and same thing, ending up right in the middle of that target zone. So we see basically we can use a trend-based Fibonacci extension tool to also look at potential profit taking targets. That being said, it is a little bit dubious. You know, it doesn't have to go to these levels, but it can give us a good idea of what might make sense to start taking profits. Flipping over, we're going to look at diagonal trend lines now. So we talked about horizontal, we've talked about Fibonacci, we've talked about, we're going to talk about diagonal now. So we see pretty much, we'll zoom in to the low time frame to start. This is a trend that I have been watching for a while. You guys know that it did recently break down from here. So essentially you saw we were riding this trend line up, and then we broke down. We got a kind of little bounce here, breaking down though, not able to regain that trend. So that trend line is lost, and then we can flip to our higher time frame chart and see what our next trend line is. So we see basically right through here, we've got this trend line acting as support. So looking here, we also see that 0.5 Fibonacci lining up with this trend line here. So that's interesting when I talk about confluence of support. You know, that is confluence of the 0.5. You see we've got horizontal support dating back to here, as well as some support dating back to this prior high here. So we can basically see, you know, we've got confluence of support in terms of trend line. We've got a Fibonacci level. We've got horizontal support. So this is going to be a good opportunity to potentially add the SPY, in my opinion. That being said, we can lose this trend line as well. There is an even bigger trend line dating back to 2009 here. You can see basically the thing with trends is the more times price has interacted with the trend, the stronger that trend is going to be, or the stronger that level is going to be. So you can see this trend line here basically was tagged 1, 2, 3, 4 times. We saw this trend line here was tagged 1, 2, 3 times. 3 times before being lost, 4 times, and then we see this trend line dating back to 2009. We've had 1, 2, 3, 4, 5, 6, essentially 7 times we've interacted with this trend line. So this is going to be a much stronger trend than this one over here. If we take a look at our Fibonacci level too, so we saw in this prior rally coming up, tagging that 0.5. So that's why I think this 0.5 confluence of support right through here is going to offer a good amount of support, you know, a decent buying opportunity. But there might be the chance that we lose this trend line, in which case, you know, you're looking at that potential to come visit this trend down here. That's not my base case, but it is something we need to be aware of. Last but not least, we'll take a look at moving averages. So moving averages are another form of support and resistance we can look at. There's a bunch of different ones. The two tools I want to show you is the moving average ribbon. So if you go to indicators in TradingView and you look up moving average ribbon, that's going to be your really useful tool here. So essentially it's going to let you have 4 different moving averages, or up to 4 different moving averages open on the chart at once. You can come into the settings here, set them how you like. I use the 8-day, the 21-day, the 50-day, and the 200-day primarily. The most important ones in my opinion are that 50-day and 200-day for the macro trend, but the 8-day and the 21-day are going to give us a little bit more insight on the low time frame, kind of seeing what things are doing. The more moving averages that you have stacked against you, the more bearish it is. So you can pretty much see right in, I'll try to zoom in a little bit here. Sorry. So yeah, if we zoom in, we see pretty much right through here, this was acting as resistance, these moving averages. And then you see pretty much right in there, we had the 200-day acting as support, acting as support, acting as support. We did lose it here, and then we were able to get back above the 50-day, 200-day. That's that uptrend structure that I talk about. So that 50-day on top of the 200-day with price above it. And then we just see we were able to ride that trend continuously up, you know, essentially just bouncing, holding this 50-day as support for the most part. And then you see right here, we pretty much come up, we've put in our topping pattern, and then we start to break down, and you see right here, we got rejected by that 200-day moving average. Same thing here, we tried again and rejected by the 200-day moving average. So you can see basically previously acting as support, now acting as resistance, also with price bearishly losing the structure of the moving average and then getting rejected underneath those moving averages. So basically all through here acting as resistance, and then same thing through here, price reverses, we get that higher low on the macro kind of up, or the higher time frame, bouncing here as support, so flipping to support. Same thing, 200-day holding support here, and holding support here. That being said, we have broken below the 200-day. That's why we now need to watch for this kind of price action. So similar to what we saw here, 50-day curling over, 200-day curling over, price loses the 200 200-day and is now stuck underneath both these moving averages, which are now resistance. So it's something we need to pay attention to. If price rejects off these moving averages, it's likely to continue that downtrend, potentially to those lower targets, those lower support levels that we have identified. So it's a lot to kind of take in at once. You just have to get on the charts and practice this stuff for yourself. Start with like the horizontals, the diagonals, work with the Fibonacci's. Really just play around in the charts. The more you do it, the more it becomes second nature, and then it kind of just go from there. Practice lots. You will have you will start to see how price reacts off these different levels and which ones you like to kind of prioritize. For me, I like the horizontals, I like the Fibonacci's, I like trend lines, and I like moving averages. So I like to use those all together to get a really good idea of where the most support is, and then that's most likely the best probable place for a position in terms of a bounce or in terms of a trend reversal. So if we can kind of use that data, stack the odds in our favor, we can really capitalize on those trends and being able to take advantage of those heavy levels of support. When other people are fearful and selling, that's when we want to be buying. So we just find our targets and we execute it when the time comes. So thank you so much for watching. If you learned something new, please like, share, subscribe. It all means the world to me, and I'll see you in the next one.